Hello and welcome to the Weekend Investing Daily Byte of 24th of July. And the budget has been presented, it has been analyzed, market has reacted to it. Surprisingly, there has not been a very strong reaction, despite many tax points being raised on the markets. Like I mentioned yesterday, 25% hike in long-term capital gain, 33% hike in short-term capital gains, 60% hike in STT on F&O transactions. So all market men and market women are hit because of this, yet the market has chosen to be almost sideways today. Uh, Immediately on announcement yesterday, there was some hiccup in the market, but it recovered back entire loss yesterday. And today there was some loss on the Nifty, but nothing spectacular. That the kind of disappointment that you are able to see in social media by traders, investors is not reflected in the stock price. And that is what really we need to absorb from the market. Is what is the market trying to tell us? The market is trying to tell us that this is done and dusted. Let's move on. So this whole tax angle has been eclipsed by a lot of other goodies in the budget, which are to do with growth and development and infrastructure and support for the weaker sections of the society. But overall, the the tax points are not able to overwhelm the markets. There is one section, however, who feels extremely I would say shortchanged, and these are the sovereign gold bond holders. I also hold sovereign gold bonds, and I would agree with most people there that there has been a change which is not fair to the sovereign gold bond holders. Of course, death and taxes are the only two realities of life, so one will have to live with that. But I'll discuss this topic deeper. I think there was a lot of concern from a lot of users yesterday, and many users have reached out to me to explain how this has impacted the gold investors in general and sovereign gold bond holders in specific. So I'll try to do that for this. But overall, if I were to see simplification of long-term capital gains, putting 12.5% on all asset classes is a good move. I mean, in general, I would say if you are making money and you have to pay 12.5% of that as tax, it is not a bad deal. I mean, given that personal income taxes are 30 to 39%, corporate tax is 25%. If you're making capital gains, 12.5% is not so bad. I mean, globally also, there are only few places where capital gains is off. But other than that, I mean, if you go to California, you're paying like 35% capital gains, for instance. Of course, we cannot compare to California. But what I'm saying is 12.5 in general is not a bad tax rate to pay, whether on capital gains or on anything else also in terms of the income tax. So please do subscribe to the channel. If you like the content, please click on the bell notification. And what we saw today was a very sort of muted Nifty performance of minus 0.27%. Again, yesterday was a great pullback from the bottoms. Today also the market, although being a bit undecisive where to go, but stayed within the range. So it was an inside day, again, staying within yesterday's range. So no real disappointment and fallout. So because if there was a fallout, and a real sort of give up, that I'm fed up of this market, I'm giving up, you would have seen 3 4 500 point drop, but it has not happened. So hence, it is safe to say that the market has very well absorbed whatever was in the budget that was against what people were expecting. Nifty Junior, small candle today, again, very muted, but plus 0.3%, not really going down much. Mid caps, good performance, I would say, 0.9%, building on yesterday's loss. Virtually entire loss from yesterday, from the morning, has been wiped out on mid caps. In small caps, you had a very good rally, plus 1.8%. We are again now within a stone's throw from all-time high. So this is really the proof of the pudding that the market went down, it recovered yesterday, and today yesterday's high was taken out. And that is a very key element whenever, in general, also when you're studying charts. if there's a big event day and the market crosses the limits of that day on either side, that is a good trigger for that directional trend to happen. Banks, however, were the odd one out, where banks were smashed down, although a good recovery towards the end, closing at minus 0.89%. My sense is that it won't go further than this, most likely. It seems to be finding its feet there. So Bank Nifty down 0.89%, different trend there versus other indices. HDFC Bank down, just like always, minus 1%. HDFC Bank, in fact, is at the same place where it was at budget 21. So hats off to the holders of HDFC Bank for staying so patient. State Bank of India down 1.38%. Bajaj Finance, Axis Bank, Bajaj Finserv, all gradually receding. I think there is some sense that too many rate cuts are not coming, and that may also be one of the reasons why this is happening. IT totally flat. Energy stocks slightly bubbly. Coal India and ONGC, Reliance all moving up. Tata Motors moved up 2.5%. NTPC moved up on good allocation to 2.6%. L&T down 0.5%. Rest also not so particular. Levers particularly dropped. Hindustan Lever dropped 1.7%. Nestle dropped 1.5%. So in FMCG space, there was sell-off, but ITC held on. So there was a good sort of a message from somebody that earlier, tobacco was seen as the uh, product which was addictive, and people are addicted to smoking, and hence taxation went up on that. And now in the last few years, people are addicted to trading and FNO, and hence taxation is going up on that. I will not be surprised, because today itself, after all this happened in budget yesterday, there was a news item today that government may further increase the taxation on FNO, or they may look at other measures on how to curb speculation. I think the government of India has decided that we don't want to stay in the headline that India is making 80% of the volumes of FNO in the world. I think they have decided to smash that, and I will not be surprised if margins are increased in coming times, or they have some criteria of net worth criteria that you can't trade if you are not below above certain particular criteria. And don't forget, the next budget is also just less than 6 months away. So things are not hunky dory for, especially for FNO. I think the intent of the government was, in raising 60% FNO taxation, was that people will step back. But I think after seeing yesterday's reaction, they are realizing that this is not enough. So I mean, that's where we are, and that's how things can play on. In the Nifty Next 50 space, you got a huge jump in LIC, so plus 6%. Huge jump in ICICI Prudential, plus 8.7%. The fine print was that for insurance products, the TDS has been reduced dramatically, and that is helping the insurance companies. REC was up 1.5%. Varun Beverages, after a long time, along with United Spirits, up nearly 4%. You had Havells, DMart, Zydus Life, IOC, Zomato go up 2.5%. No major fall except FMCG again. Dabur and Godrej CP, along with Marico and Kolpal, were also down. Uh, Overall, no major collapses in fertilizer stocks, in rail stocks, in public sector enterprise stocks. I was expecting that today, after the budget is done with, there will be some sell on news that this is done and dusted, but very surprisingly, most of them stood their ground very well. In terms of sectors, you had energy stocks and public sector enterprise stocks, as I just mentioned, take the lead today at plus 1.2%. Real estate coming back 0.8%. So this view yesterday that real estate has been smashed because of taking away of indexation, I think is not such a correct view. I think overall it may be a positive for the real estate. I'll cover the real estate part of the budget in tomorrow's daily bite, but today I will focus on gold. Pharma stocks also up 0.7%, and what was smashed down was basically private banks and Bank Nifty overall, along with PSU banks. FMCG also losing about 0.5%, right there. You had oil and gas recovering very well, almost to the top of yesterday's high. So I think this sector did quite well at 1.69%, and MMTC up 20% today. I mean, this has been amazing. MMTC, in fact, people were calling for a shutdown of this company very, very recently. But it seems that there is some plan which I'm not aware of what MMTC is up to, but this is going absolutely bananas, going from 20 rupees to 100 rupees in just a matter of a year. On the long term basis also, you can see there's a beautiful actually head and shoulders, inverse head and shoulders pattern, and this has come after a 99% drawdown. This stock used to be 1300 and it came down to 9 rupees, and then post here it has almost gained 1000%. So this this inverse head and shoulders pattern also has a good target of approximately, I would say, 150 rupees. So this is something to be watched by sharp traders. So now let's discuss gold bond holders feeling cheated. So sovereign gold bonds are bonds issued by RBI, and they have been issuing it since 2015-16. Many of those bonds are now, because they have a 8-year maturity, are coming for redemption, and they will keep redeeming now from here till 2032, I think. Uh, so the last tranche was earlier this year, and post that they have not come out with a new tranche. I think, and it is just my guess, government has finally realized that this is not such a good deal for them, because they are having to shell out the gold returns, they are having to shell out 2.5% interest on it, and India's current account is looking better than before. So they've even reduced the gold import duty from 15% to 6%. So from that point of view, India doesn't need to curtail buying of physical gold right now. That's the message that is coming out of this budget, that go ahead and buy physical gold. Go ahead and buy uh, gold, because we are giving you a 12.5% long-term capital gain tax rate, which is very, very benign, I would say. You buy gold and you sell after 2 years, you pay only 12.5%. You buy a gold ETF, you sell after 2 years, you pay only 12.5% uh, uh, capital gains. You buy physical gold, you buy sovereign bonds. Sovereign bonds are anyway tax free if you hold on till maturity. So life for gold buying has become easier, but those who are holding the gold so far are feeling cheated, and this is why. So yesterday also I tweeted that in the last 8 years, a huge amount of gold has been sold by the government through sovereign gold bonds. Let me rephrase that. A huge amount of gold bonds have been sold by the government. There is no backing of that. There is no gold behind it. Yes, India has gold reserves, but they're not specifically targeted to as backing sovereign gold bonds. Now, rates have been going up since 2015. I think gold is up like 150%. We were at 25,000 per 10 grams in 2015-16. Now we are at 70,000 per 10 grams. So we've almost tripled since then. So now government has sold this to buyers, and buyers will redeem, and government will have to pay 70,000 or whatever is the formula. The formula is that they will calculate 5 days average in the previous week whenever redemption is there, and there is a association called IBJA, Indian Bullion Jewelers Association, which comes out with a daily rate, which is the average rate of where gold is trading in the country. So the RBI will take Monday, Tuesday, Wednesday, Thursday, Friday, take an average, and redeem the bonds whenever they are matured based on the previous week's 5-day average. So that is transparent. There is no issue in that. Now what is happening is uh, the and this is my guess. I mean, I have no way to say that government is thinking this way. I think they are feeling that they did a big mistake by issuing sovereign gold bonds, and now there is an attempt to somehow maybe reduce the outgo. So this reduction of 15% duty to 6%, what it does, it immediately caused gold prices in India to drop 9%. So somebody who would have bought gold 2 days back, even for their children's wedding, is today, feeling stupid that, the gold price is down by 9%. So this kind of, addition of import duty, reduction of import duty really is not fair to some people who get caught in this change. Now, just see the change how it has happened. In 2012, There was a 2% import duty, then it became 4%, then it became 6%, then it became 8%, then it became 10%. And this was pre-Modi, before you start blaming him for that. And then Modi kept it here, Modi's FM kept it here at 10%, and then current account went for a toss, and we went to 13%, then we brought it down again to 11, then we took it to 15, and now suddenly it is 15 to 9, 15 minus 9 to 6%. Now, the beauty of the current situation is that most of the gold bonds, sovereign gold bonds, have been sold in this period. Approximately, you can say at 12% average import duty at least. Actually, it is more towards 13%. Now, people have paid 13% at the time of entering sovereign gold bonds. And the purpose of the sovereign gold bond was that you will get the gold returns for the 8 years that you hold. Gold prices in India are determined by import duty set by the government itself. So on one hand, the government is saying we will give you gold returns for the next 8 years, but from the other hand, they are saying we will control the price of gold. So if one were to really challenge this situation, the giver of the bond cannot really control the price of that bond. That is sounding a bit unfair, right? So this is, I'll show you another sheet which will probably be more sparkling data for you. This is directly from the Reserve Bank of India website. These are all the sovereign gold bonds ever that have been issued. If I go down, so this is from November 30th, 2015, and this one has matured, and hence the unit outstanding is 0. So 3 series have matured till now, and there is some premature redemption in some of the others also, but largely speaking, you can see that 140 tons of gold. Am I getting this right? 300, and this is grams, right? This is in grams, yeah. So this is 1000 kgs, yeah. 140 tons of gold has been bought by sovereign gold bond holders. Fantastic, fantastic. 140 tons is almost 20% of 15 to 20% of what India gold reserves are. A substantial amount. Okay, now what has happened? What has been redeemed? This was bought, 146 tons was bought, 6 tons was redeemed, so 140 is remaining now. Now, the important part is that since 2020, you can see here the increase in terms of, and this column is the number of units subscribed. You can see there is a substantial increase in number of units subscribed since 2020, and it is just increasing. It was 700 kgs here, and by the time you are coming to the recent series, it is almost like 12 tons of gold. So 80 or 85% of this outstanding gold has been issued in the last 4 years. Now let's go back to the previous table again. This is where most of the gold has been issued, when the import duty was either 13 or 11 and mostly 15. My sense is that we are the cost of acquisition for most people is at about 13 or 14% of custom duty, which is now reduced to 6%. So most people have lost 8% out of thin air. If gold was at 74,000 yesterday, the calculated price, today it is 68,000 something. Suddenly 9% have gone. Who made money? People who bought here and who were holding here, they had gained out of nowhere for the increase of import duty. But people who bought here have suddenly been robbed of 9% of their purchase value. This, I think, is not fair. I mean, folks had come into the sovereign gold bond only wanting the gold returns and 2.5% interest, taxable interest on that. What have they got? They will get gold returns. They will get 2.5% interest, but minus 9% of custom duty, which is government sleight of hand. And if you calculate it over 8 years, you've lost 1.1% CAGR because of this jugglery that government has done. And not just that, if you were to calculate 140 tons of gold, and you save 9% on that, and maybe they will bring that 6% also to zero. You can imagine the kind of money that government has saved by doing this. Because whenever gold is now getting redeemed, they have to pay lesser amount on redemption. Whenever it was sold at the highest amount of tax of import duty. So this, I think, is extremely unfair. I am not sure if anything will be done about it. Of course, somebody files a PIL or something, maybe there will be a discussion about it. But this, according to me, is daylight robbery. You sold something at a certain price, assuming a certain import duty. 6 months later, 2 years later, you decide to take away that customs duty from 515 to 6, and people are robbed of 9% of their wealth. That is not fair. Please do write in the comments what you think about this kind of a event that has happened. There is agitation. I mean, I got many emails, many Twitter comments that this is loot, and this, if somebody agitates this logically, they should devise a formula that buyers of SGB with old duty should not lose out. It's actually, maybe the government has not even thought about this when they did this, but this is an actual realistic loss to somebody for no fault of theirs. Yes, you can say that, sovereign gold bond terms would say that whatever is the gold price on that day, you will get it. Yes, I mean, all those arguments can be made. But as a fair policy towards small investors, protecting small investors, I think SEBI and RBI can look into this and potentially address this if there is enough number of people making some noise on this. I think that's where this daily bite ends. What is your perspective on this? Please share on this channel. I'm highlighting this because a lot of folks have reached out to me, but I don't know what happens next. But thank you so much for watching, and I hope you have already subscribed to our channel. Thanks. Bye.